Welcome to the Daily Brief, where we'll go over the highlights for the action in the market for Thursday, November 10th, and then see how things look for Friday, November 11th. And we had a really strong up day. The markets really liked the CPI. There was positive reaction to it, and we just kept going and going to the upside. And that has really improved the situation overall. Please be reminded that the bond market will be closed on Friday in observance of Veterans Day. One more time, I just want to say a heartfelt thank you to those who have served and sacrificed, not only to you, but to your families. It is much appreciated. So let's go back and talk about what happened. Right at the open, we had a massive gap higher. The futures were kind of unchanged. They were really uncertain before the report came out, up a little bit, I think about 0.25%. The report came out and boom, we just shot up about 2.5%. The markets really, really liked the report. It came in weaker than expected. So when we finally opened an hour later with the stock market, we opened above R2 at 38.44. As the day went on, prices kept going up and up with some minor pullbacks, which is fairly normal. We eventually worked our way to R3 and then actually went above R3 at 39.18. We closed pretty much at the high. Some of that can be attributed to late day short covering. And those folks that short the market, they have to sell to get in. Well, when prices move against them, they have to buy to get out. And so that just pushes prices higher and higher. And once they realized we're not coming down from these levels, they pretty much had to get out. They didn't have much of a choice there. We ended up being up 5.54% on above average volume. That's positive as well. We have been below average all week. Monday and Tuesday and Wednesday, we just weren't seeing a lot of volume. Some of that can be attributed to the election, but the fact that we had an up day on growing volume is fairly positive. The technicals, it seemed like Monday and Tuesday we had up days, so we kind of switched everything back over to positive. Wednesday was a big down day, so we switched back to negative. Thursday now, things are switched back positive again. Not to be all that shocking to you, but we went up so far so fast that we're actually showing some overbought conditions. And you'll see that when we're in more of a choppy sideways market, like our ADX has been telling us. It doesn't take much for us, if we go up or down, to get to an overbought or oversold condition. When we're trending over a period of time, then we can see not necessarily these big moves, but moves that consistently go in the same direction that don't produce an overbought or oversold condition. But this is all being caused by inflation and interest rates. Also, there's still, we're not really sure about the midterm election. Really, nothing has been decided as of the time that I record this. They think that the Republicans will take control of the House and possibly the Senate, possibly not. But the markets like that there could be a mixed government with Republicans and Democrats, because then they'll be less likely to pass new tax hikes or regulations or new stimulus plans or anything like that that really can impact the stock market. They like it when Congress pretty much has its hands tied, but it's just producing some uncertainty in that realm currently. So here is how things opened up. We got above R2 right at the open, made it all the way up to R3, and it looked like, okay, maybe we're going to top out here. We started to fall back a little bit, came down to this intraday moving average that I like to use, went back up to R3, then stayed along that line for a while. But when it was apparent that we weren't going to go down, we started to go higher near the end of the day, and we pretty much closed right at the high. So what are some comments? The market will be open again on Friday, but the bond market will be closed. And stocks really liked the weaker than expected CPI. I'll go through that here again. And now we have a new scenario. It's really the old scenario version, I don't know, 6.0 or something now. The idea that maybe inflation has topped out, it's starting to come down, so the Fed can maybe not stop raising interest rates and certainly not cut interest rates, but maybe at least slow down raising them for right now. So the market since last spring has been trying to latch onto this idea only to have it extinguished every time. Well, is this going to be the exception now? Is 6 or 7 or however many times this has been, is that the charm that we're going to experience? We'll have to see how it plays out. Then the dollar was down 2.5%, and interest rates also declined. That gave more support for stocks to go up. So if we continue to go up, you might see continued weakness in the dollar, and interest rates going down, meaning bond prices going up. That would be a more healthy environment. If we get bond prices starting to recover and going up, that pushes interest rates down, and we see stocks and bonds both moving up together. And again, likely as the dollar may be going down. We kind of overdid it though. Not kind of, we did overdo it. On the rate of change, looking back from Wednesday to Thursday, the 1 day, and even looking back 5 days, we are extreme positive with that. And the advanced decline line going from Wednesday to Thursday, we're extreme positive with that as well. And with that kind of a move, it's probably not all that surprising. Another thing that is positive is that the parabolic SAR, which doesn't shift all that much, it has now turned positive. One caution that I'm seeing right now in the charts is that we're not really seeing a breakout yet of the new highs and new lows. They're still holding up and they're still doing okay, but they're not with the big upward move into territory that we haven't been in a little while. We're not seeing a corresponding breakout in the new highs with that. And the summation index, which in yesterday's video I said had switched back over to negative, it was actually turned down. Well, in Thursday's session, it switched back to positive. And we have the same yield curves are still inverted, but the 30 to the 5 is no longer inverted. I'm still keeping it on the list for right now, another day or so of this, and I may take this off the list. Sentiment is positive. We had been neutral. With the update, we're shifting more, but we're not necessarily extreme positive, at least yet. And here's the CPI that came out, the headline number, the total CPI. It increased 0.4% on a month-over-month basis. They expected it to be up 0.7%, so that was quite a bit less than expected. The core, and this is what the Fed really pays attention to, that takes out food and energy. And remember, we were seeing gas prices starting to go back up. They increased 0.3%, where they expected it to be up 0.5%. So that was also quite lower than expected. And that's considered to be the important number. And that's really what shot things up. And on a year-over-year basis, the CPI is up 7.7%. The last time we got this, we were looking at an annual rate of 8.2%. And at the core level, we're looking at 6.3%. Or the last time we got this report, we were looking at 6.6%. So this is still 35, 40-year highs when you look at it historically, but compared to what we've been battling with in 2022, it is taken as an improvement. The jobless claims, for the first time that I can recall in a while, actually came in higher than what was expected at 225,000. We're still watching the overall trend of that. Speaking of trend, again, the trend is still neutral. We're still below 20 with the ADX, even with the powerful update that we saw. But the green line is now crossed back above the red line, so it has a positive bias, but we're still below 20. It is starting to strengthen. It's starting to turn up. Excuse me. I'm still dealing with the illness and everything, and my speech gets impaired rather easily. I changed the bias over to positive with the monster update, and I've actually switched our momentum back to positive because the CPI, that's a little bit longer lasting. That may actually carry the market for a little bit. Doesn't mean we're necessarily going to go up, but at least it seems to be more positive unless something else flies into the picture to take things more negative. Here is, if you go to a site called shadowstats.com, the orange line here, red and yellow together, that's the number that came out. That's what's reported. That's the official government number. What they have up here on the top is the blue line, and that's how they used to calculate the CPI back in 1990. Okay, and that has us at about 11% or so if you go back to how they calculated at that time. The one that's kind of scary is if you go back to 1980 and how they calculated it then, even though we're at 7.7%, if you go back to the way we did it about the time Ronald Reagan was elected, we would be at 15.9%, which is very, very high inflation. That's the kind of inflation that we were experiencing, well, back here. You can see over on the chart, we're back in those general areas. Looking at the daily chart, we really showed some improvement. We were able to get back above the 50-period moving average and just break off. And now we're heading towards this other resistance area here. We're above the pivot, so that's turning things more positive overall. And down at the bottom, you can see where volume has picked up. This is the chart that's a little bit concerning. With this massive breakout, and see, we haven't been here for a while, since fall anyway, late summer, early fall. We're not seeing a corresponding rise in the new highs. Now, if we keep going up, this will continue to improve, but it's just a little concerning not really to see that. So we're showing some improvement with our 5-day high-low moving average, and we're still actually declining just a little bit with our 10-day. Then just to show you the moving averages, we were down below the 20 moving averages. Well, we sliced through those. We got above the 50, and now we've actually been able to get above the 100-day moving average. And now we have the 200-day moving averages above where we're at currently. So that's the next thing to kind of keep in mind with overhead resistance for right now. So much improved. So what's our outlook then? The technicals have turned back positive, but we are giving a short-term overbought condition. We have preliminary consumer sentiment. That's the only thing coming out, and it's a big report. Comes out after the market opens, but it could have a little of an impact on the market, but probably not all that much. And then all of our geopolitical events, again, with inflation and interest rates really being the main focus right now. The haze or the uncertainty that's over the midterm election. We've got the Iran-Saudi situation just to keep an eye on, because any one of those, usually negative, could come flying in and have an impact on the market. So our scenarios, not going with the down scenario, not going with the up necessarily yet, even though we switched back to positive with the ADX below 20 and starting to turn back up, we're still considered to be in a trendless environment, believe it or not, even with that big monster move. Now, you may differ from that, and the ADX is used just as a guide, just as a suggestion. If it's something that you really want to use or not, it's totally up to you about using that. But it is getting a little bit stronger, but it's still below 20 and it's switched back to positive. So that's kind of the current scenario for right now. So our conclusion is the S&P is turning back positive. Short term, it's positive, but overbought. Intermediate term, looking much better. We even actually, and there's a couple of actually overbought indicators. I think the CCI was extreme positive, but some of in our oscillators, we had one or two of them starting to go negative. They're showing some improvement again. But long term, we still continue to be negative as long as we are below the 200-day moving average. So thank you. And this was about take 8 of this daily brief. Usually I just hit the button once and start going. I'll do my best to do a full-length video over the weekend. I'm still really battling some things with the illness right now. So I don't know. Again, all I can do is try with the weekly video and the intermarket analysis video. I'll at least be posting a daily brief like this video, and I'll just do the best I can with the other videos. So have a great day, and I will talk to you in the next video.